Right now, across America, home buyers and real estate investors are seeing something unprecedented in 10 specific cities. The clock is ticking towards a dramatic price collapse due to an explosion of inventory, triggering widespread panic among sellers as they are forced to sell. And we all know that more inventory is bad news for home values. Zillow reported last month that the flow of existing homes coming onto the for sale market rose 20%. Realtor.com reported we're seeing the highest inventory levels since 2020 and an influx of lower priced homes for sale. In fact, 32% of all homes on the market have taken a price cut just in April, and that's more than any other April in the last decade.
There are more homes on the market now with price cuts than in any April in the last decade. Price cuts are climbing now, when last year they were declining still in April. Last year, that demand pointed to home price appreciation for the year. We ended the year with 5% home price growth. This year, the signal is much weaker.
And this could be the beginning of the very opportunity home buyers and real estate investors have been waiting for. But with mortgage rates on the rise again, affordability could be an issue for all, but not if you know how to buy a house without a bank, like Sherry bought this one, and Chip bought this one, and Dontel bought this one. If you want to know how they did it, grab a copy of the Creative Cash Flow Playbook at creativecashflowplaybook.com. It's free. Now, I'll get into the 10 cities that are poised to crash, but I've got to point out what's going on in Florida first. You know, we're seeing a crazy housing market downturn there, with the number of homes for sale quadrupling in the past 2 years. The prices in Florida are dropping rapidly in multiple markets, driven by the surge in inventory, which is being driven by the uptick in mortgage rates to a 2024 high this week, creating even more affordability issues for buyers. Similar trends are being seen in other states, indicating a broader shift in the housing market. But if we look at the home prices nationally, they are still remarkably high, with a 6% increase in the resale price of existing homes and a small decline in new home resale prices of 8%, but still above the median price of all homes for sale. Some experts are predicting that home prices will continue to rise, fueled by the belief that many buyers are just sitting on the sideline waiting for interest rates to drop.
If rates go down just another percentage point, that's what I'm hoping for by year, and prices are going to go through the roof. And so if you wait for interest rates to come down by another point, I don't think you'll gain. I think you'll wind up paying more, because I wouldn't be surprised if real estate went up by another 8 or 10% if interest rates come down another full point.
However, the exploding inventory across many states in America suggests a market shift and a potential home price crash. First, I'll list the top 10 states experiencing surges in inventory, which are resulting in price cuts. And stay with me, because right after, we'll dive into the nitty-gritty of the specific cities whose metrics are pointing to the biggest market crashes in the country. Working our way from number 10 to the number 1 state that is getting hit the hardest with an influx of inventory is Colorado, with a 24.3% year-over-year growth in for sale inventory. 8.5% of that is just in the last 30 days, which has led to 20.3% of all listings in that state experiencing a price cut in March. Alabama and Indiana are seeing noticeable increases in homes for sale, with 20.5% of all active listings having to lower their prices. If the trend of increasing inventory and declining prices continues, we could see a significant downturn in home prices in every state, affecting homeowners and investors alike. I mean, look at Louisiana, South Carolina, Tennessee, Texas, Oregon, and Arizona, all experiencing a 20 to 30% increase in for sale inventory, with 25% of those active listings having to cut their price. The only state to see 30% of all its listings reduce their prices is the aforementioned Florida. But let's look at the bloodbath sellers are taking in these seemingly collapsing cities. Counting backwards again from 10 to 1, Austin, Texas, 32.1% of their listings have taken a price cut. Palm Bay, Florida, 32.6% of sellers have cut their prices. Huntsville, Alabama, Pueblo, Colorado, and the Villages, Florida, all experienced 32 to 34% of their housing inventory cutting prices. And this is significant because in a balanced housing market, typically around 5 to 10% of listed homes might see a price cut in any given month. And here we are, right now, we're seeing 3 to 6 times that number. I mean, look at this, up to 7 to 8 times of what's normal. Naples, Tampa, and Cape Coral, Florida all saw 35 to 37% of their active listings cut their prices. And Northport, Florida, 38.3%, and Punta Gorda, Florida, 40.7% of active listings slashed their prices. But something really important to keep in mind and in perspective is that although this surge in houses on the market is factual, what's actual is we're still about half the inventory levels of where we would normally be this time of year. And it's important to understand these shifting dynamics because many hear these surging inventory numbers and think they're face to face with some sort of financial nightmare. And in reality, it's probably better news for all that the housing market is creeping back to a normal place. But we've still got some way to go. And will we ever get back to normal? That's the bigger question because we still have a significant housing supply issue in the country. You know, people seem to understand the law of supply and demand when it comes to gasoline, microchips, and toilet paper. But when referring to housing, people just throw the law right out the window because it's real estate. A housing crash is inevitable just because it always crashes, right? We crashed in 2008 because we had too many houses. Now, we have too many people. Yeah, but these prices, they can't go up forever. That's what most people are saying, followed up by who can afford a home today? That's the common public sentiment. I understand the sentiment too, but just because you don't know anyone who can afford a house, what you need to know is that someone is indeed affording houses. Because when we look at the data, home sales are up despite the rising mortgage rates. And the median price, that's up too. There must be a breaking point though, where the market does a 180, right? Well, when we're speaking of an essential need for a human being's welfare and overall existence, like a roof over their head, it might be a minute until we hit that breaking point. I mean, people could revolt and just stop buying houses and choose to live under the stars, but that's not a reality. It'd be like going on a hunger strike because food was too expensive. At the moment, it sucks to be a home buyer. I get it, especially a first timer. But some sellers in some cities, they are getting a small taste of the consequences of being in such an extreme seller's market for so long, being forced to sell at prices lower than what they want or what they expected. All in all, the situation, it remains complicated. You know, high mortgage rates, which hit their 2024 high this week, 7.1% for the average 30-year fixed mortgage, it continues to pose a barrier to entry for many potential buyers. Even with a forecasted drop in mortgage rates to around 6%, which has come into question this month due to inflation on its way back up again, the flow of new resale supply is expected to remain limited. Well, let's build more, right? Well, housing starts, they fell to 14.7% in March to an annual rate of 1.32 million units, countering February's robust 12.7% increase. So the flow of new supply, it just can't really seem to make up its mind, but more importantly, it just can't get here fast enough. This scenario suggests that while more homeowners are now willing to list their properties, the overall market dynamics are still characterized by high prices and relatively tight inventory, keeping the housing market competitive and challenging for buyers. If you own property, consider yourself blessed for the long run. And if you'd like to buy more using more of your intellectual currency than your actual currency and your credit score, I pulled this video out special for you to watch next. All right, thanks for watching. I'll see you next time.